The JSE is firmer today, while its global peers were mixed as investors digest the U.S. labor market's indication that more challenging times are coming. Roy Mutooni is with Sanlam Investments. He's an analyst there, and he joins us for the latest market moves. Roy, thank you very much for your time. Let's start with an overview of how the local index and the rand are trading so far today.
Yeah, so the index is up about 1%, just under 1%, but that's largely on account of Northern and Process as well. Most of the other stocks are either flat to down. So from a volume perspective, it actually looks like it's winding down for the weekend. The rand, on the other hand, has actually weakened, almost by 1% as well. It just seems to me maybe it's a delayed reaction to the stronger dollar, but it's a significant move nonetheless.
Well, the World Bank says it is concerned about the slow economic growth and high inflation that is weighing down South Africa and the West African nation of Nigeria. Talk us through some of their concerns.
So the interesting thing here is when you combine Nigeria and South Africa, that's about 40 to 50% of total GDP for sub-Saharan Africa. So when those grow very slowly, it means the sub-Saharan Africa statistics look really dire. The thing about both of those economies is they're struggling from an inability to implement structural reforms. South Africa, as we well know, that's more around competitiveness of the economy as well as energy policy, load shedding in other words, whereas Nigeria, it's around the subsidies they have in oil production, and a variety of stuff like that, like also the fighting that they're doing in the north part of the country. So the thing is, these countries are big from a GDP perspective, but very small from a GDP growth perspective, and that tends to cloud the outlook for Southern Africa, for sub-Saharan Africa, rather.
Sure. Vodafone Group's Spanish business is attracting takeover interest from potential buyers. What more do we know?
So there's no official transaction on the table, but I think Vodafone's been under pressure from a lot of these corporate raiders to restructure and create value from either a breakup or something of that sort. And this Spanish business is just the latest of all the speculation we've been hearing. Remember, we also heard something about Vodacom in South Africa as well being a potential sale. The thing about Spain is that this was a reasonable business, but then the market started to consolidate. They were left behind, and now they're not a very profitable business. So I think a lot of the corporate traders are trying to push Vodafone to sell this business to somebody else who can probably a local or private equity who will probably manage it a little bit better. But yeah, it's just turmoil within that group around corporate action.
Sure. Google and Amazon's layoffs in Europe have stalled over legal rules. What's going on?
Yeah, so I think it's interesting. These American firms are beginning to understand that outside of the U.S., it isn't that easy to get rid of people. So in the U.S., you have employment at will, and when you declare we'll fire 10,000, 20,000 people, you can probably get it done within a month. But in places like Europe, very similar to what we have here in South Africa, you have to go through workers' councils, you have to go through labor unions, and consult and go through a lot of consultations with a lot of stakeholders. So it's actually going to take a whole lot longer. And the biggest problem with this is you leave a lot of people in limbo, concerns about their jobs, not sure whether they're on the line or whether they're not, and how long it will take to actually get your termination benefits and get out. So I think it's just a lesson that these American firms are understanding, are beginning to come up to when they've left the U.S. and are starting to do the stuff they do in the U.S. in other countries.
Thank you very much, Roy Mutooni, for that update, Sanlam Investments Analyst.